Well, good morning. It's June 12th. Hope you guys are having a great summer. Wanted to start with the latest data here in the Austin metro area. I'm going to start with interest rates right now. This is the week that the Federal Reserve is going to be meeting on Wednesday. So it's good to kind of see where interest rates are as we kick off this week. Right now, most of the loan products are going to be in the high sixes. In fact, the 30-year fixed rate, which is what most clients are going to be using, is just under 7%. So Federal Reserve is going to meet on Wednesday. It's kind of iffy whether they're either going to pause or are they going to raise their federal funds rate another quarter point? Either way, it doesn't directly impact mortgages, but what will is the sentiment of the bond investors. So watch the bond market, especially the 10-year treasury. That does impact mortgage rates. So, if the 10-year treasury goes up today, I think it's about 6.75. So if later this week, 3.75, if it goes up later this week, odds are it's going to impact the mortgage rates. If it stays flat around 3.75 or comes down a little, it might soften the mortgage rates. So the bond market's kind of more forward looking and trying to predict what they think returns will be in the future. If inflation's coming down, they may come down with it. But pay attention to that. So that's this week. But right now for buyers, sellers, just know we're right under 7% in the market right now. And it's still putting some pressure on buyers for sure. All right, wanted to share with you this chart here. So there's another broker in town named Eric Bramlett. He has a good newsletter that comes out, and I'll show you some charts why I like it. But anyways, I'm going to share with you some of the May data and then show you a couple charts at the bottom. So this is looking at May 2022, last year in this column, May 2023 in the middle column, and the change. The reason this is important, as I've said since the beginning of the year, right now is where you're going to see the worst data year over year, the worst data, okay? The reason is May and June of last year were the peak of pandemic pricing. The interest rates had already spiked, so May and June last year were really March, April, May closing in May and June, and then all of a sudden those interest rates, you could see where it adjusts the price. So we're now comparing this year versus peak of last year. So total sales is closings. We're down some. It's not terrible. But if you come down here to net new listings, we're down by half. I mean, we only have half as many homes on the market because sellers don't want to sell right now. And so that's in the metro area. So I found that really interesting. Average sold price and median sold price, obviously you can see the hits here, 11 and 14.5%. So again, we're down, call it 14, 15% median home price year over year. Okay, so that's a nice adjustment. That's a big price change. And yet I would argue we're still up 50 to 60%, depending on where you live, from the beginning of 2020. So we've still had a huge run up, even in that 3 years, even if you take this reduction. So that's for the metro area. Months of inventory, we're sitting about 3.5 months for the total area. Still not a heavy buyer's market. And then if I come to the city of Austin, again, same drill, net new listings are down about 30%, median home price down about 17. Oh, that's price per square foot. Median home price down about 13.2%. And so again, in the city, not quite as bad, but still pretty similar in trend, down about 13 to 15% for the total metro area. And months of inventory, same drill. We're sitting about 3.6 months of inventory. So anyways, that's kind of the year over year and where you're going to see the big negative numbers. That's the kind of stuff that the media is going to report on. So you're going to start seeing the articles that says, oh, Austin's had this huge decline, and that's true. It is true, but it's also comparing backwards looking data. Well, let's look a little forwards. So this is the average sold price in the last 12 months. This is going back probably to May. And so, last May, the average price was almost pushing 700. And then you see the decline to about February. Look at that. We dropped about 140,000. But look what's happened since February. We've gone back up. And so what's happened is the spring bounce. Buyers come out. They get used to the 6%. They want to buy. And also there aren't as many sellers, as we just showed you in the last chart, coming out to sell. And so it decreases that inventory and you have some battles. And so what's happened is we've started to see multiple offers come back, not on everything, but we've seen multiple offers come back, especially on the really affordable product in the suburbs. There's some stuff that has been coming in at good prices and they're getting 2, 3, 4 offers. And so that is starting to happen, but I think that window is about to end. We're getting close to July 4th. Every year, July 4th, the market tends to slow down. It gets 100 degrees, people leave. If you didn't buy a house to get into the school district on time, now you're kind of late in the game. So we're kind of that next 2 or 3 weeks, I think, is probably going to see that activity, and then it'll start to taper off. Here's the median sales price. You can see the same thing come down, 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 and then it has that little spring bounce. I expect this year we're going to have a little bell curve, and we're kind of peaking on that bell curve right now, and then it's going to start to taper off later in the year. Here's the final one, metro year contracted units. So how much decline did we have? Well, we had a huge amount of decline last year, huge, right? We were down almost 60% in terms of, how many people were writing contracts, but we're starting to catch up. We're a little low, but we're not bad. So we're still kind of trending not too far off where we were last year in contracted units. All right, I'm gonna switch back over here and show you where we are on the front page of the MLS right at this moment. So this last week we had 1,000 new listings. Price reductions have been going back up. And so we're seeing price reductions. We're sitting about 1440. That's out of roughly 10,000, maybe 11,000 listings. So again, we're sitting probably 12 to 14% of the market right now in 1 week is reducing their price. So I think what's happening is the stuff that prices really well, we're seeing move pretty fast within 1 or 2 weeks. The stuff that is just not priced well, it takes time to get to the right price, because if you're not priced well and your competition is reducing price, it's like a stair step. It might take you a month or 2 months to get back to where the buyers want to buy you. And by the time you get there, there aren't as many buyers coming in the front door. So what happens is you get that big swell of buyers at the beginning. If you miss it, you're only going to have a few buyers at a time later as you sit on the market. And so that's why you either sell fast or it takes several months to sell. So I find that interesting. Finally, I'm going to leave you with this. So this came out of Redfin. This article came out May 31st. Investor home purchases fell a record 49% year over year in the first quarter. Not a huge shock. I'm going to show you the chart. This is the part I found interesting. So this is a real easy visual for you. So basically you can see, a lot of investors in the early 2000s, and then you had the housing downturn. Things got unaffordable, and all of a sudden you have the investors drop out, and they dropped by 2008. And so what happens is the bottom of that, no investors, was 2008. They kind of saw, and then as the price came down, the investor activity went back up. And so what happened is they peaked out in the middle of the last decade, and then they had a nice little run. We got to the pandemic. Everybody kind of thought it was too unaffordable then. So when the pandemic hit, the investors kind of stopped. But then what happened? Incredibly low interest rates, incredibly low inventory, a feeling of like, if I don't buy something, I have to buy something. So investors came flying into the market. It went up almost 130% in that short amount of time. But then, of course, they bought everything. We get to 2022, interest rates go up, and bam, 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 investors have left the market again. And so that's what's going to happen. You see these cycles of investing. So right now, this is one of those cycles where property values are up, property taxes are up, especially here in Texas. Insurance is up. Yeah, rents went up some, but what's happening is the ability to cash flow a property, to buy it, fix it up, and have the rents be more than your expenses is almost all but gone. And so what's happening is the investors have moved back to the sidelines. They'll come back. Things will happen in the market. Things will change. But for now, we're seeing investors drop off. So anyways, I hope this was really helpful. I know this is a lot of data, but if you want to follow all of our videos, you can check out at Ryan Kelly Group on YouTube. We post all of our weekly videos there. And of course, if you know anybody buying, selling, or investing in Austin, or want to go into a deeper discussion on this, happy to set up a call and do that. Until then, I hope you guys are enjoying summer. We are going to hit 100 degrees later this summer. So it is definitely peak season for summer sales and for summer temperatures. You guys have a great week, and we will talk to you next week. Thanks.